Good morning. This is Ken Long from Tortoise Capital with a review of a number of regression line crossover trades from June 28th, 2013. We'll start with XIV. That's the inverse VIX ETF. And we're on 3-minute charts. And we've marked up the chart in the usual way. The um, solid blue, or the darker blue shaded region, is the river, the Bollinger Band plus or minus 1 standard deviation. That's a 30-period Bollinger Band plus or minus 1. The floodplain is the plus or minus 2 Bollinger Band, defines the limit of normal. Solid red line in the middle is the Bollinger Band mean, a simple 30-period moving average. Light blue is the moving linear regression line 10 period, regression line 10. The solid black is regression line 30. Solid green is regression line 90, or the longer term trend. The purple line is the VWAP, the volume weighted average price. Price is reflected in bar charts. These are 3-minute charts, and the orange ribbon is a 2-period Bollinger Band, which we take to be the real price. So we've got the market opened in XIV with a significant gap down, well outside the floodplain. We saw the horns of the dragon right here, the 2 long wicks outside of the ribbon, unaccompanied by the price ribbon. And so that's almost a regression. That's almost an Anderson regression line stretch, and we saw higher lows, long wicks, big gap, and made this play here on the initial one at entry at 1950 with a 20-cent stop. It got as high as 1960, or about 64, maybe about 3/4 of an R in hand. Reversed pretty sharply. Didn't hold. We decided just to scratch this one here. It sold off down to 1936. Now we get the 10-period regression line rolling over, crossing the 30, and as the price ribbon enters the river, we enter in the usual way. This is play number 1 in the regression line crossover system, and that is buying price entering the river after a regression line crossover in an extreme condition. So we buy this at 1948 with a 15-cent initial stop below the price ribbon here. Target is the far side of the river. It gets to the Bollinger Band mean. That's the first checkpoint. It blows right through that. And so at 1966, we've got about a little over 1 hour in hand and aiming for the far side. Decide to put a second position on also with a 15-cent stop and start raising the stop through here. It gets to the far side of the river. It gets to this dark brown one is a 200-period linear moving regression. Gets to the far side. Well, we raise the stop to no lose on both excuse me, on both positions at 1970. So we'll be in the money on this one. It turns out that it continues on past the far side of the river, takes out yesterday's close, which is this lightly shaded yellow line here. So when it clears that, we make a third entry at 1990, and then it's off and running. So when it gets up here to 2025, you can see little baby horns of the dragon here. And that's when we go ahead and move this stop. We've been tracking this stop moving all along with the 30-period regression line as a guidepost. And now that price is well outside the floodplain, we go ahead and lock in a win on the third position here. So we're at 2013 with 3 positions in hand. Shortly thereafter, that was the 2 little baby horns of the dragon. It starts tracking sideways for a while. The Bollinger Band floodplain catches up to it. It starts failing, and we go ahead and exit here when it makes a new low here below those 2 wicks, and it's we can see the regression line crossover outside the river getting ready to happen here anyway. So we go ahead and exit at 2015. We exit all, and that locks in 8R, and now we're stalking this next move because we have a one favorable trade in hand, pulling back, finding support above the Bollinger Band mean, and we'll see how that one works out next. So using our standard pattern of nice trade in hand, a measured pullback, an orderly pullback, and then a swing low, then a higher low, followed by a second higher low. When this green candle has closed with a higher low, and then this one opens and takes out the higher the high of the previous candle and still hasn't made a new low, that's sort of an automatic re-entry. We look at that as a lazy W, strong move, cashed it somewhere in here, swing low, taking the second green candle, provided that there are two higher lows. That's why we get this entry here at 2015 with again 15-cent stop. This time we're looking at just below the ribbon swing low, and with a 15-cent stop. About 10 minutes later, there was no follow-through. It just started mucking around and then started rolling over, and so this scratches at about 10 minutes later. But that's sort of a typical reentry. What we're hoping for is whatever the size of this leg was, and after this measured pullback, we'd like to see that kind of a size. I'd settle for half of that because that would be about a 4R, and that's still well within the range stat of XIV. That another leg like that is certainly within reason intraday, and that's why we go ahead and make that second entry. Why do we exit back up in here? Because when a regression line crossover from outside the river indicates a real possibility of getting back to the Bollinger Band mean, that's the expected case, and even the far side. In the same way that this one moved to the far side of the river and beyond, we're looking to preserve the profits we made on the way up here and not letting it get all the way back to the Bollinger Band mean to exit. So that's why we made that earlier exit. At the same time that was happening, AGQ, which is the double silver, was the number one symbol in our stack. You can see already up at this level, it's up 8 and some percent so far. Silver had a gap up, pulled back to the edge of the river, retested the high, pulled back to the edge of the river with a higher low, and when it took out the ribbon swing high here, and all signs are pointing to yes, you can see by this time that we've got the river is flowing up on expanded volatility, the 90-period regression line, the 30-period regression line, the 10-period regression line, the VWAP itself, everything is pointing north. And now that we've cleared this intraday opening shenanigans, we're at 45 minutes into the session. Go ahead, make this entry at 1575, 25-cent stop, which is right at the Bollinger Band mean and below the swing low of the ribbon here. We make this entry. It runs pretty quickly and gets up here to 1670. If I hadn't been working XIV at the same time, I might have tried to get a second position in, but by the time it's making this run, I've already got 3 positions in XIV from the previous chart. So that's my 4 bullets for the day, and I've already committed all my capital. And so what I'm doing now is monitoring the silver trade and XIV during the day, and because I've got all 4 in, I still feel pretty good. Get all my money in on a good hand. So this gets all the way up to about 1680, pulls sideways. Shows no sign of crashing below this 1645 level. So I decided to stay with it a little bit longer. It comes back and is making a regression line crossover here. Now, second one, technically, could I get out here? Yeah, but one of the reasons I stay with silver is because it's been beaten down over the last 15 days to such an extent that this is really just day one of resurgence. This is the only buying interest we've seen in the last 15 days. And so my sense is that there may be some more in this one. And as long as it's consolidating and nobody wants to cash this, I believe like there's another room for another leg up. So right after this crossover, the 10 starts expanding. If I had exited in here, this would be a natural place for me to enter. So I feel like I've re-entered in here. I don't like the feeling of having money in the trade while it's just mucking around. But at the same time, because it's silver and it's a 2-week sell-off leading into day one recovery, I don't mind holding that because when it explodes, it can explode like this And so I don't mind holding this position right now. It takes off, and then about 15 minutes later it rolls over. It doesn't make a new ribbon swing high and starts rolling over once more. And because I wasn't really happy with my decision to stay in here, I said, let me just get to, let me cash one here. As it rolls over and rejoins, now it's looking like a sideways quiet channel, and I know how to re-enter this one. I'm going to play the breakout from here, or if it breaks out this way, I'm going to be short with ZSL. So this is a chance to get back to the zero state and to cash 3R in silver. So a little bit later, here's the re-entry on silver. So this is where we exited right in here, and now it's been sideways quiet channel for about 30 minutes, and it votes to the upside. So we go ahead and take this entry here at 1675 with a, 1675 and about a 25-cent initial risk. It moves out to 1679. Oh, I'm sorry, this is 1665 with a 20-cent stop. Misread my own chart. And now it's starting another leg up, and I'm hoping to see one of these. However, it gets up to 1679, which was 1R in hand, and then rolled over. And at this point, when it gets to 1R in hand, I go ahead and tap in my protection here at 1670. And about 15 minutes later, it mucks around and then crosses this line for a fractional win of 0.5R. Meanwhile, after a period of sideways quiet channel, we're back over to XIV. It has gone sideways. Here was the regression line crossover looked at before. And now we're in a period of sideways quiet channel. So now the 10 and the 30 have left the river here and are riding the north shore of the river. And I play this entry here at 2020 with a 20-cent stop, which is all the way down here. And about 6 minutes later, this got as high as about 2026, and then rolled over, and then everything in the market started selling off sharply, and volatility was increasing, which drives XIV down. So this ends up being a scratch about 6 minutes later at 2020. So this was lack of follow through. And so that's about, I guess, around 10 or 11R on some measured trades using our standard patterns with regression line crossover and sideways quiet channel on June 28th. We were lucky enough to be prepared and trade these in the usual way. So thanks for your kind attention. Keep your risk measured and your powder dry.